Tuesday, April 19th, 2022, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at how the Fed is taking investors for a ride. And by that, I mean they're saying one thing and doing something else. I mean, that's the definition of someone who basically is lying. And I don't like to use that word. It's a strong word, but I'm not the only one saying it. Before we start and look at that, though, I'd like to make a couple of announcements. First, to thank again all of you who have an interest in my channel and what I have to say, and all of you who have helped build the community, because that's what it is. Our channel is a community, and it's not just my channel, I guess. It's yours as well, and thanks again. The second announcement is I always get people asking where, or new subscribers or new viewers, where can I buy gold and silver? And that's the other thing. I never really tell people to do what to do. They decide for themselves after listening to what I have to say and doing their own research. So yeah, for those of you in the UK who are looking to buy gold and silver, the first thing I would say is to do your homework, to shop around online. There's a lot of good dealers, bullion dealers, but I do have a good relationship with gold investments. I've had that for about 20 years. It's a family-run business, and they're based in London. Very personal service. It's a family-run business, and the way to contact them is always in the description of my videos. The second way that you might want to own gold, because they don't do silver, is through Glint, and I've been working or associated with Glint since 2018. And Glint is a little different. They hold your gold allocated in an allocated account in a vault in Switzerland, physical gold, and they give you a MasterCard with which you can actually spend your gold. And you set up Glint through an app. It's the GlintPay app. And also the details of how to connect with Glint are in the description of all my videos. I have a referral code there. It's Mario Glint 79. So to the Federal Reserve, I saw a tweet yesterday, and I wasn't surprised. Someone said, how come the Fed's balance sheet is still increasing? And what's the Fed's balance sheet got to do with QE, or what the Fed is doing and saying? Well, the Fed's balance sheet is a reflection of Federal Reserve monetary policy. And the Fed has been telling us since around November that they were going to taper their QE. I think at the time they were doing 120 billion a month, a mix of mostly US Treasuries and also mortgage-backed securities. And they said that by the beginning of March, they would have finished their tapering. And what does that mean? Well, they're decreasing every week or every month the amount of QE they did. They tapered. And what people understood by saying that they would finish tapering by beginning of March is that they would be doing no more QE. They would be at zero. And so their balance sheet would have had to been flat since March. But as you're going to see here in a minute, it isn't. And I also wanted to touch upon a Fed governor. He's the governor of the St. Louis Fed. He's a guy called James Bullard, and he's been uber hawkish, so to speak, in the last few months about raising rates, about unwinding the balance sheet. And he made some comments. Let's have a look here. Just overnight. So Bloomberg says, Fed's Bullard says 75 basis point hike could be option if needed. What else? Reuters says, Fed's Bullard wants to get rates up to 3.5% by year end. So most people now see Bullard as a hawk, but many people, or maybe not many, but maybe you and some others remember that Bullard was like an Uber dove just a few years ago. And I have an article here to prove it. And this is from July 2019. And this was around the time when the Fed was still trying to unwind its policy from 2008. But in a few months, we saw that they had to really reverse everything and start doing not QE again because of the repo crisis. So Bloomberg here says July 2019, so not even 3 years ago, Fed Dove James Bullard backs quarter point cut, would love to be a chairman. I really don't understand why they use that term, why they can't use chairman. Yes, if it was Mary Bullard, you use chairwoman, right? But chair, who wants to be a chair? Anyway, what's the point of me talking about Bullard? Well, it just goes to show, I think, that the Fed talks one way and does something else, and that the Fed is really a propaganda monetary institution, really. It's trying to manage perceptions. They've taken the guy who is historically the most dovish guy, and now he's become an Uber hawk. And it's just, I don't buy it. And I think when most investors start realizing that the Federal Reserve is taking them for a ride, well, you're going to have to run for the hills. You're going to have to be, I think, not just in precious metals, but also if you are in the stock market, you want to be in the defensive side of the investment world, I would say. Things that do well in a recession, and I'm not going to go over these here. It's not the point of the video, but you can look that up. Google best defensive investments during a recession. And why am I talking about the recession? Well, even the World Bank, I think, or the IMF, it doesn't matter which one, they revised lower their forecast for growth for world GDP from 4% to 3%. And you can bet it's going to be a lot lower because the forecasts of these major international institutions are always really behind the curve, I would say. So after seeing that tweet, I decided to look at the Fed's balance sheet. I hadn't looked for a while because I had assumed there was nothing happening there because they're supposed to taper. But yeah, I should have known better, right? You can't trust the Fed. So as you can see here, the latest data and this data comes out, I think, Thursday night, London time, Thursday afternoon, New York time. So April 13th, the Fed's balance sheet hit 8,965, 487 million. So that's 8.965 trillion. And that's the highest it's ever been. So if you go back to, let's see, beginning of March, when they should have finished the tapering, the Fed's balance sheet was at 8.904 trillion. So you would have thought it would have stayed at that level, right? And the Fed's balance sheet is composed of bonds, notes, and bills, I would say, that mature sometimes. So yes, they could buy extra securities to keep their balance sheet level, but they're not supposed to increase it because they're supposed to stop QE, but they haven't, as you can see here. And I just saw an article as well on Zero Hedge, and it came out yesterday as well. It says the Fed lied. QE didn't end. Protect your portfolio from inflation now. And it's by Graham Summers, an MBA from Phoenix Capital Research. So let's quickly go through this because he's done some interesting analysis here. Graham says, if you've been wondering why stocks suddenly exploded higher last month, wonder no more. We were told the Fed ended its quantitative easing, or QE, on March 9th, 2022. That's a strange claim given that the Fed's balance sheet has expanded by $55 billion since that time. The other thing that happens when they expand their balance sheet, that $55 billion goes into the banking system, and the banks lend the money to other financial institutions, to hedge funds, to pension funds, all kinds of institutions, and they leverage when they do that. So you can probably multiply that $55 billion a few times over, if not 10 times over. Heck, the Fed just bought $25 billion worth of mortgage-backed securities last week. How odd. The Fed supposedly ended QE, but right as stocks began to break down, someone suddenly panic bought the markets, forcing them higher. And then it turns out the Fed was actually expanding its balance sheet by $55 billion over the same period. So here's the chart here of when they started doing more QE. And I agree with Graham because, yes, they've been warning investors and the public since June, really, that they were going to get tough, that they were going to reverse policy. And here we are almost 12 months later, not exactly 12 months, but very close to. And they've only done one thing, and that's to raise rates from 0 to 1/4 while their balance sheet is kept going up. And despite that, the stock market is keeling over because, yes, we had a rebound there, but year on year, the NASDAQ is down about 15%. And I think investors sense that, and that's why commodities have had such a good year-to-date performance, gold and silver, the miners, and that's going to continue. So let's just finish reading Graham's article. It's quite interesting. To put this number into perspective, the Fed's former QE program, the one that supposedly ended, was roughly 30 billion per month at the time it concluded. In this context, the Fed roughly doubled the pace of its former QE to 55 billion in the month after QE supposedly ended. So again, the Fed are total liars. And I think you can safely say that and not be worried about being, how can I say, taken to a court of law to answer for that. Because calling an institution or someone a liar is a very serious allegation or accusation. QE didn't end. In fact, it became larger. Meanwhile, according to official data, inflation hit 8.5% in March of 2022, the highest ever year, the highest year-over-year increase in 40 years. And if we were to use accurate methods for measuring inflation, it would be, well, I would say, he says over 12%. I would say over 15%. Again, the Fed is lying. They're not tightening monetary policy, and inflation is only going to get worse from here. If you want to protect your portfolio from what's coming, you need to act now. So you might want to look into Phoenix Capital Marketing. Why not? I haven't. Anyway, yes, the Fed is taking investors for a ride. So they have come out recently and said that they will do quantitative tightening of 95 billion. But you have to wonder what's going to stop them doing that. And that's why I think we need to be concerned about like an outside event. And I don't know what that's going to be. And that's why you need to have some of your financial assets, in my opinion, some of it outside the system. And I know sometimes I worry about some of my holdings in the miners, even though they've done well, the fact that they're inside the system. But I've made sure that what I have in there would not destroy me financially if something were to happen. But this concerns me because they're really between a rock and a hard place, and people are starting to wake up. It's not just Moneco 64 and the community here and other alternative communities. It's major investors. I think they're waking up to this. So with that, let's look at where the markets are this morning. It's 8:30 a.m. London time. Spot gold is virtually unchanged at 1975. The high has been 1981 and the low 1972.50. I think yesterday we got just below 2000. The spot price got up to like 1999 or 1998.50, and then it came back down. The technical picture still looks really good, especially for silver. I think silver, and I know we were at 30 almost 2 years ago, but I think silver could be at 30 by the middle of May. So why do I think silver could be at 30 by the middle of May? Well, if you look at the falling wedge here in silver, the bottom in February was around 22, and then we went up to almost 27. So that's a $5 move, and then we consolidated. This is a consolidation. That's usually what a falling wedge is, a consolidation in the prior trend. So the prior trend was higher, and we've broken out of that wedge. So if you look at where we broke out of that wedge, it was just between 24.50 and 25, so around 24.75. So if you add $5 to that, it takes you to almost 30. And I measured the time that it took for gold to go, for silver, sorry, to go from 22 to 30. That was about 5 weeks. So I extrapolated that now, and it takes us to the middle of May. We could be at 30 by then. It could be even before. You never know with markets. So gold and silver still looking good technically. Maybe in the short term is a little bit under pressure, but medium and long term still looks very good. And that's not surprising, seeing that the monetary policy of the Federal Reserve is unraveling. And the great enemy of the Federal Reserve, of course, is gold. Stock market, the Dow is up only 6 points, Dow futures, so pretty much unchanged. Same thing for the NASDAQ and S&P, so I won't go over them. The FTSE as well is up 4. Yeah, everything's really quiet this morning. Euro stocks 50 down 12. To the currencies, sterling is testing 130. It's down about 0.1% at 130.10. The low has been 129.87. The euro is up slightly at 107.90. My goodness, the yen is continuing to melt down here. It's traded up to 128.33, and that's a really bad signal. It's like a canary in the coal mine that not just Japan, but the whole system is really in trouble. The fact that the Japanese yen is dropping so much, not just against the dollar, but also against gold. Yeah, we are at 128. So it looks like the Japanese monetary authorities, i.e. the BOJ, are really kind of keeping things together for not just for the Fed, but for the Bank of England, for the for the ECB. And I'm going to put a video up in the cards where I spoke to Weston Nakamura from Real Vision Finance in Tokyo. And we spoke all about this, but this is getting out of hand here. The yen is really falling out of bed, and that's a really bad signal for the overall financial markets. Dollar is up slightly versus the yuan at 638.63, and the dollar is unchanged versus the Swiss franc 94.49. Aussie dollar is up 0.5% at 73.83. The dollar is down 0.25% versus the Canadian dollar 125.78, and the Kiwi dollar is unchanged actually 67.36. To the general commodities, WTI crude is down 1%, 106.60. Brent crude is down about 0.7%, 111.50. High-grade copper down 0.5% at 479.50. And natural gas, U.S. nat gas, is down 1.25% at 780. Last but not least, the 10-year yield, U.S. 10-year yield is unchanged at just around 2.87%. Could we get to 3% this week? Definitely, we could get to 3% today. We could go to also 2.7 today. That's how volatile the Treasury market is at the moment. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.